Good morning and welcome to today's live trading section. Okay, I hope you all have a good night. You slept well and your night was peaceful. So today we are going to be analyzing the synthetic market. We're breaking down the market step by step, showing you how I analyze the synthetic market using technical analysis and price action. So today we are going to be looking at the market and see what the market has to present to us today. If you see our setup, we are going to be trading. If you don't, we are going to be sitting on our hands. But the most important thing is that we are going to analyze the market today. We're going to be doing top-down analysis. Okay. So if it's your first time of seeing me, my name is Vetexx, and what I do on this channel every day is I analyze the market, break it down to you, give you values. Okay. And then if there's anything you don't understand, you can always ask in the comment section. And if you are joining us for the first time, do well to subscribe and follow our Telegram channel so that you can follow us for more updates. Okay, so what I'm going to do right now is I'll share the screen so you can see everything I'm going to be doing this morning. So if you have any question, you can always ask me. So I repeat again, every morning we analyze the synthetic market 6 a.m. to 7 a.m. Okay, 14 pairs every day. Right. So I'm going to share my screen with you right now, and then we'll check what the market has for us today. All right. Okay. This is what I'm going to be doing today. Um, let's check. So every day we have about 13, uh, 14 pairs to analyze every day. So first of all, I'm going to be sharing. I'm going to be starting from the first pair on our watch list. All right, the first pair on our watch list. So okay. The first point I watch list is step 200. So before the step 200, before I analyze step 200, there is something very important I'm going to be revealing. Okay, so let's do it this way. Uh, Sorry for the glitch. Okay, now before there's something I always do on this channel where the before I analyze any trade, before we always start our day, there is something I always do for those people joining for the first time. Okay, if you're always joining this channel, if you are joining us for the first time, what we trade is the advanced market structure. So on the advanced market structure, we trade what they call advanced market structure, is also known as the algo market structure. Okay, whereby we trade liquidity. Okay, and then it's also it has a chart pattern in this manner whereby there are 5 rules that guide the advanced market structure, whereby we have a market creating series of higher high, higher low, higher high, higher low. So take for example, you want to buy on this market, you want to sell. Okay, now once price uh, break this low, okay, we are going to be anticipating. Now, let's say you have something like this, for example, okay, this high here, you consider it as our liquidity, all right, and then we want price to sweep it to give us a protected high. Once price break it like this becomes what protected high. Okay, this becomes our protected high. Now we were to anticipate this our protected high. This now becomes our sweep of liquidity. Remember, price just take out this high, this liquidity that is here. So this protected high, this is our sweep of liquidity. This liquidity has been swept. Okay, Okay, and then we have price taking out this newly created low to give us our what first break of structure. And then what is the next rule number three? Price should retrace 50% and give us what structural liquidity, which is this. Okay, after price give us structural liquidity, price is expected to take out this newly created low again. Okay, to give us what our second break of structure. Now price will come down here, take it out, and now it has given us our second break of structure. Okay, now from there, price will retrace to take out this newly created liquidity and continue to the opposite direction. So this is what it's going to do, and then continue to the opposite direction. So this is basically what we always have. Okay, the market is always moving randomly. So we have a sweep of liquidity, which is this, and then this is our protected high, which is this. It's our protected high, which is this right here, and then we have this low. This, remember, this is our first sweep of liquidity, okay, to give us this protected high. Now we have price to take out this newly created low to give us our what first break of structure. Now we have our first break of structure. Remember, the advanced market structure has five rules that guide it, right? Now this is our first break of structure. Now price retrace 50% to give us what structural liquidity, which is this. Now this structural liquidity is used for continuation. This transactional liquidity here that we call first sweep of liquidity, it is used for correction. Okay. Now after price retrace, give us a 50% retracement to give us structural liquidity. It take out this newly created low, which becomes what our what second break of structure. Okay, so this is rule number one. This is rule number two. This is rule number three. This is rule number four. So let me just label it. Rule number one. So this is our number one. Okay. Now this is the first rule, sweep of liquidity, which is here. Rule number one. Now price give us price sweep this liquidity to give us a protected high, and then price give us take out the newly created low to give us what our rule number two, which is here. Rule number two, which is here. These are rule number two, and then price retrace 50% to give us what structural liquidity that need to be taken out, which is rule number three. Remember, the reason why I'm doing this for the sake of those people that are joining for the first time. Okay, that are joining this live for the first time. Now, price give us this structural liquidity. Now, price need to take out this newly created low to give us a second break of structure. So this becomes our what rule number four. Okay, so this is now rule number four, right? And then the rule number five is price will take out this liquidity. Price will take out this newly created high, which is our transactional structural liquidity, which is used for continuation, and move to the opposite direction. So this is now rule number five. Okay, so you can see how easy it is now. Okay, we have rule number one. Let me see it. We have rule number one, rule number two, we have rule number three, rule number four, rule number five. Okay, so this is what we have. This is how we treat the advanced market structure. And once you are doing top-down analysis, the key point is that what we see on the higher time frame will scale down to the lower time frame and look at for the same thing. Okay, but you are seeing this structure on the 24-hour time frame or the weekly time frame, 24-hour time frame. Now, the weekly time frame and the daily time frame, we use that as our directional bias, where price is coming from, where it's going to. Now, the 4-hour time frame, the 1-hour time frame is what we use as our structure. Okay, these are those structure. Once it's found on the 4-hour time frame, you scale down to the 15 minutes time frame or the 10-minute time frame, and then execute on those time frame. Okay, so that is basically what we do when we are doing top-down analysis. So So top down analysis is basically one of the most important key aspects whenever you are doing your technical analysis. So I believe you understand this. And if you are joining for the first time, if you don't understand, there is uh, I already created a playlist where I've explained this. I've explained this there. You can just go to the playlist of this channel, check advanced market structure, and then you're going to see a full, clear explanation of the whole of this. Okay, so that is basically it. So now the next pair we are going this now we are done with this illustration. So same thing you are looking for when you want to sell is the same thing you look out for whenever you want to buy. So this is it. The same thing you look out for when you want to sell, the same thing you look out for whenever you want to buy. Okay, so it's as simple as this. All right. So let's check out those pairs that we are going to be analyzing today, and let's see what we have. Okay, let's see if there's something coming up. Okay, step 200. We're going to be analyzing step 200 from the higher time frame. Now, starting from the higher time frame, we have our structure that has already formed here. Okay, we have our structure that has already formed here, which is this. Remember, we are trading the advanced market structure. So our row number one, okay, our row number one, if you can spot it clearly, we have sweep of liquidity, which is here. This is the daily time frame. Since you know that this trend is bearish on the weekly time frame, if price comes to this daily time frame POI, we'll scale down to the 4 hour or the 1 hour and check if price is coming closer to that point too. But if it doesn't, okay, if it doesn't, after we do this analysis, we are going to scale down to the 4 hour time frame or the 1 hour and check the next recent POI. Then we can anticipate that. So if price doesn't come here, price will come to the hourly time frame. So this is our rule number one, which is the sweep of liquidity. This right here is our what? First break of structure. Rule number three, price retrace 50% to give us structural liquidity. Rule number four, price give us our second break of structure. Now what you're anticipating next is rule number five, that price should come into this zone and start selling to the opposite direction. So this is what you're anticipating. So now the whole of this zone becomes our point of interest. So we anticipate this. If price does this, then we are going to be scaling to the 4 hour time frame and look for continuation, and then scaling down to the 15 minutes time frame to execute. Okay. So the reason why I always say you should always get to the 4 hour time frame, and then after I see a continuation on the 4 hour time frame, you scale down to the 15 minutes time frame. I'm going to give you a reason when I'm analyzing step 100. Okay, and that alone will save you a whole lot of money from losing unnecessarily. Okay, now let's go to the 1 hour time frame, the 4 hour time frame, and check if we are going to find the continuation setup. So we can't really see anything on the 4 hour. Let's go to the 1 hour time frame. On the 1 hour time frame, we have a sales continuation that is forming, which is this. This is rule number one. Sweep of liquidity. Rule number two, first break of structure. We have a protected high. Rule number three, we have structural liquidity. Rule number 4, you have sweep of we have our second break of structure. Now this zone becomes what? Point of interest. So we're anticipating price to come into this zone and then start giving us 15 minutes continuation. Now this is going to be the starting point of this sell, and this zone is going to be the finish point. Because once price come into this POI and it start reacting from it, we're going to scale to the 15 minutes time frame and start taking continuation. Right? That's what we are going to be doing. So we are going to anticipate step 200. Okay, so we are going to be anticipating it. So let's check out the next pair, which is V15S. Okay, V15S has been bullish on the bearish on the daily time frame and the weekly time frame. So we have our continuation set up on this time frame. First of all, we have one here on the 4-hour time frame. You have a continuation on the 4-hour time frame. You can see we have sweep of liquidity. We've already marked it for yesterday analysis, but price is yet to come into our POI. So we have a sweep of liquidity, and we have a first break of structure here. First break of structure. This is rule number 3, structural liquidity, and then second break of structure, which is here. So this is second break of structure, and then after that we are anticipating price to come into this zone and then set to the opposite direction. It's just basically following the trend. So once price tap into this point of interest, we are going to be uh, scaling down to the 15 minutes time frame. But now remember, this is the 4-hour time frame period, and we have another 1 hour here. So let's go down to the 1 hour and check. So it depends on the one price get to and start reacting. So price might not come to that up and react, but it might come to this zone, this 1 hour zone here, this 1 hour zone here, and then start giving us continuation on the 15 minutes time frame. So that's what we're going to be waiting for on V15. So bear it in mind that V15 is bearish and it's giving a 1 hour and 4 hour sales continuation on the hourly time frame. So once you tap into our point of interest, we are going to start selling it. If you give us a continuation setup on the 15 minutes, so this is going to be the starting point here, and then this low here is going to be our finish point. So let's check out the next pair, which is V25. So starting from the 24-hour time frame, on the weekly time frame, V25 is bearish. It's very bearish on the weekly time frame. So I think what he's trying to do now is trying to tap into the 24-hour time frame structure and then continue the sell on the 4 hour. Okay, so if you can spot this clearly, please, if you are following and you are having any confusion, you can just type your question in the comment section. As I'm analyzing, I can also read comments. So I would not want to leave anybody behind. So if you have any question confusing you, you can just drop your question in the comments. Okay, so clearly this is the 24-hour time frame. Right now we have our rule number 1, which is what? Sweep of liquidity. Sweep of liquidity. Rule number 2, first break of structure. This is the daily time frame. This is our protected high, which is here. Now price doesn't need to pass through this protected high. That is why it's called protected high. And then rule number 3, price betrays 50% to give us structural liquidity, which is this. And then this is rule number 4, second break of structure. Remember, this is the 24-hour time frame. So once price tap into our POI on the 24-hour time frame, we'll be anticipating another continuation again on the on the 4-hour time frame or 1-hour time frame. Then from there, we can always go to the 15 minutes time frame and our what anticipate our sell. Okay. So if price tap into this POI, it's going to start selling from here, and this low here is going to be the finish point. So within this zone, you are going to scale down to the 4-hour time frame and look out for this same pattern on the 4-hour time frame. Now, once you got the 4-hour time frame pattern like this, you scale down to the 15 minutes time frame. Now, once you get to the 15 minutes time and you spot your pattern, you know that the 5 rows are complete. Okay, then that is when you can start executing whenever price comes into your POI. Look out for your confirmation entry and then you sell. Okay, you sell. There are different type of confirmation. You can study confirmation entry. Confirmation entry is also in the playlist of this channel. You can just watch it and then get some clear and understanding of what I mean by confirmation entry. Right? So this is what we have on V25. The next we are going to be checking is step 100. Let's check out step 100. Now step 100 is bearish on the weekly time frame, bearish on the daily time frame. Okay. Now something funny happened yesterday. Alright, for those of you that have been following the live, okay, and I'm going to explain to you why you need to always wait. Whenever price tap into your 4-hour POI, you don't just start selling from that point of interest. Okay, so this is the reason. Now, yesterday we have our sweep of liquidity, which is rule number 1. Rule number 2, we have what? Second sweep of first break of structure. And then we have our protected high, which is here. We also have price betrays 50%. They give us what? Our structural liquidity. We can use this. Okay, let us use this. And then we have what? Second break of what? Structure. This is our second break of structure. Okay. This is our second break of structure. Now, what price did is that these are POI. So this is going to be the starting point, and this is going to be the finish point. Correct? It's going to be the starting point. This is going to be the finish point. So yesterday, some people put their sell limit here in this POI. They put sell limit in this POI, and what happened is that price didn't respect this point of interest. Though the structure is valid, the trend is valid, but price didn't respect it. The reason is because once you have a POI on the 4-hour time frame, price tap into your POI on the 4-hour time frame, you wait for price to reject and give you a continuation setup on either the 30 minutes time frame or if the 50 minutes time frame. That is an extra confirmation. From there, you can start selling to the opposite direction. That is what some people need to do yesterday. But instead, they think that if they set their limit entry here, they are going to be catching more wins. And that is where they set themselves up. It is not about catching more wins. It's not about catching more wins at once. You see, one thing with trading is it's not about that ego. It's about consistency. Okay, somebody can be doing a 1 to 3 risk to reward, 1 to 2 risk to reward, and consistently making money. But you can be doing 1 to 10 risk to reward and then you are struggling. That is the reason why you need consistency over that speed. Okay, so you want to do 1 to 30 risk to reward. Now you've lost your money yesterday, but somebody that is patient, okay, wait for continuation, they sell, wait for another continuation, they sell, look at another continuation, they sell until price take out this target. Okay, that is why it's always good to study and then pay close attention to what the market is always doing. All right, now So next time whenever you see price, tap into your 4 hour zone or 1 hour zone and it always stop you out. The reason is just wait for a lower time frame confirmation, continuation, then you can take it. Okay, that way you know that okay, you have a short target, price gives you 1 to 2, 1 to 3, you're out of the market, wait for another one. Right? So for people to enter this trade yesterday means they have a lot of capital and fortunately price didn't respect what they want and that money is gone. So we're going to be checking out. So nothing happening currently on step 100. Step 100 currently, nothing is happening at the moment. Okay, so we are going to be passing it for now. And then let's check out the next pair. Let's check out the next pair, which is step 500. Let's check out step 500. From the weekly time frame, step 500 is bearish. If you have your step 500 is bearish on the weekly time frame. Okay, so on the daily time frame, nothing is really showing on the daily time frame. All right, so what you are going to do now is go to the 4 hour time frame. Okay, so on the 4 hour time frame, we have our rules here, which is this. We have our rule number one, which is sweep of liquidity. You can always call it transactional liquidity or sweep of liquidity, anyone, as far as you understand it. What is wrong with this mouse? So rule number two here, we have our first break of structure, which is this. We have our protected high right here. And then we have rule number three, price retrace 50% to give us our structural liquidity, which is this. I think I need to do something. Okay, good. So this rule number three. Rule number four is that you see price giving us a second break of structure after taking out the newly created low. And then we have here our point of interest on the 4 hour time frame. So this point of interest, price tap into it, continue to the opposite direction. Now this is the starting point, and then this is the finish point. All right, this is the starting point, this is the finish point. Okay, you can see price sells almost matching that TP, and then it come back to the zone again. And now on this zone, we have a 1 hour sales, which is here. So now let's check it out. I'm going to removing this. Let's check 1 hour and let's see the sale that is coming on that 1 hour time frame. So we have this, which is so clear. First of all, we have our what? Rule number one, sweep of liquidity. Rule number two, first break of structure, which is this. Rule number three, price retrace 50% to give us what structural liquidity, which is that. Okay, now this zone is our point of our protected high. Okay, and rule number four, price take out the newly created low, giving us what structural our second break of structure, and this zone becomes what our point of interest. You see, price has tapped into it and then it's trying to sell to the opposite direction. So this is what we have on step 500. Now let's go to the 15 minutes time frame if you are going to see a sales continuation from there. Now currently nothing is happening on step 500. So we are going to be moving to the next pair. We're going to be moving to the next pair, which is let's check it out. So we are going to be anticipating sales continuation on step 500 from here. Okay, we are going to be anticipating a whole lot of sales continuation. So hopefully price give us what we are looking for. All right, of which is going to do. So we'll be on the lookout. Okay, we'll be on the lookout. So let's check the next pair we have. We have V100. Let's check out V100. So on V100 we already have this on the daily time frame, which is this. V100 we have our markup already on the daily time frame. Sweep of liquidity, first break of structure, which is here. Then price give us our structural liquidity, take out the newly created low, giving us for second break of structure. Okay, and then price needs to tap into the point of interest and continue the move to the opposite direction. So this is our point of interest. Now that price has done this on the daily time frame, the target is going to start selling from here and then take out this newly created low here. So this is point A and this is point B. Okay, now let's go to the 4-hour time frame if you are going to see a sales continuation. So if you spot the sales continuation on the 4-hour time frame, we'll then scale to the 15 minutes time frame before we can then start executing, right? So currently you can see that we don't have anything on V100 at the moment. There's nothing on V100 at the moment, but it has started selling on the daily time frame. So you are going to wait until you'll be seeing series of sales on the 15 minutes time frame, 10 minutes time frame, but we are not going to be taking out until price give us a structure on the 4-hour time frame and the 1-hour time frame before we can scale down to the 15 minutes time frame and start selling. Okay, so now let me check the next pair, which is a V30 index. Let's check V30 index. Okay, good. So V30 index, we already have our markup too, which means it's selling on the weekly time frame and it's also selling on the daily time frame, but it only give us a structure on the daily time frame. So here we have what our sweep of liquidity. Here we have our first break of structure. Okay. Secondly, we have price retrace 50% to give us our structural liquidity, and the rule number 4 is here, second break of structure, which is this. Okay, and then we have price tapping into this zone and then continue to the opposite direction. Now this is the starting point, and this is going to be what the finish point. This is starting point, this is the finish point. Okay, then let's go to the 1-hour time frame and see, or the 4-hour time frame first, and see if you see our continuation on that time frame. So currently we don't see continuation here. Let's go to the 1-hour time frame if you are going to spot our continuation on the 1-hour time frame. Of course, there is a continuation on this 1-hour time frame. Right now, let's mark it out. We have our sweep here. We have been anticipating this sell for some time now. So price has tapped into our point of interest. So we have our sweep here. Okay, now we have our first break of structure, which is this. Here we can use it like this. First break of structure. Alright, price retrace 50% to give us what our structural liquidity, which is this. Okay, and then we have our protected high, which is here. Okay, and then we have our second break of structure, which is the fourth row, which is this. And then the rule number 5 is price tap into the point of interest and continue the sell to the opposite direction. Now this is the point of interest. This is the target. Okay, so we are going to start selling from this zone to take out this target. So now that we know where price is going to on the 1 hour time frame, from the 24-hour time frame, and we've gotten our structure on the 1 hour time frame, we'll scale down to the 15 minutes time frame and see if you are going to spot our continuations setup on that time frame. Right. So currently this is what is happening. We haven't seen anything on this time frame yet. So till it's formed, then we are going to start taking more trade. But yet right now it hasn't formed yet. So we haven't seen anything yet. So we hope it gives us the continuation before taking out this target. So this is what we have on V30S at the moment. Now let's check the next pair on our list, which is V90 index. So hey guys, if this is your first time of joining our live session, so we do this every day, 6 a.m. to 7 a.m. from Monday to Sunday, and basically analyze the synthetic indices market. Okay, showing you using pure technical analysis and price action. And if you're watching this video on replay or you're joining for the first time, don't forget to like and subscribe if you are getting values, and also spread the information to your friends that are interested in trading so that you all can join and learn together. Okay, so this is V90S. Let's check the next pair. Let's check the time frame. Starting from the higher time frame to the lower time frame. On the weekly time frame, V90S is bearish on the weekly time frame, and the daily time frame is also bearish. So we have, if you can see clearly, we have what we have a sweep. Excuse me. We have a sweep which is there's a tiny sweep here, because that is where price is selling from. Okay, and then we have a break of structure. We have our structural liquidity. There's a second break of structure here. Then we have protected high. This zone becomes point of interest. The price needs to tap into and continue to move to the opposite direction. So price has already tapped into it. The next thing now is the price to continue to move to the opposite direction, which is what it's going to be doing. So this is the starting point, and then down below here is the finish point, right? The starting point or finish point. Now let's go to the 4-hour time frame and see if you have a continuation there. We recently had a continuation on this place, but price has already taken the target out. So there's no need for anything here again. So this is it. Price has already taken the target out, right? And it's almost as full TP. So we won't be more very interested in V90S again, because price has almost matched the target. We just look out for a fresh POI, a more fresh POI. So nothing is currently happening on V90S. Let's quickly check the next one, which is V25 1S. So V25 1S is trying to do what you have been anticipating for days. Yes. So this is it. I love this. You see, first of all, we have a 4-hour point of interest somewhere around here, because the trend is very, very bullish. Okay, now we have our point of interest here. Okay, we have a recent We have a 4 hour structure here. We have our sweep of liquidity. We have our first break of structure. We have our structural liquidity, which is our second liquidity. And then we have our second break of structure. This is our protected low. This is the POI. So we have been anticipating price to come into this zone. All right, come into this zone and continue to move to the opposite direction. Then start giving us and this is another recent point of interest come to this place. So whichever one it respects, we will scale down to the 15 minutes time frame and start taking trade. So this is what we're anticipating currently on this bed. Hopefully you get here and do what you anticipate. Okay, so this is what you have on uh volatility 25-1 index on the 4 hour time frame. So let's check the next pair out, which is V75-1S. Let's check V75-1S out. Let's check what it has. What is trying to do. What is trying to do. Okay. Okay, we have something beautiful. Oh, oh really? Okay, now let's start from the 24-hour time frame. So we're going to let's start from the 24-hour time frame. The 24-hour time frame, you can see that we have our rule number one, which is what? Sweep of liquidity, which is there. That's sweep of liquidity. You can see how top analysis has been saving our ass from seeing unnecessary setup. Okay, so once you know where price is coming from, where price is going to, it will be easier for you than marking random setup and then taking unnecessary losses. So since that we have been analyzing this, you see that we haven't gotten any setup. And whenever we get a setup, it always plays out because what we know what we are doing, and top analysis is key. So you have to understand the top analysis. So this zone becomes our what point of interest. The price is expected to come here, tap, and then move to the opposite direction. So as you can see, this this right here, yes, this right here is the target. Okay, now let's go to the 4 hour time frame. You are going to see any more continuation. So this is what we have been anticipating on this trend on this 4 hour time frame. So before price come into this zone and do what you're anticipating, whether it does it or not, we are going to sit on our hands and watch out for it. Okay, so this is a high, and then this is first break of structure. These are structural liquidity used for continuation, and then we have second break of structure, which is this. Now this one becomes what? Point of interest. We're anticipating price to tap into this zone and continue the move to the opposite direction. So if price gets here, this is going to be the starting point, and this is going to be the finish point on the 4 hour time frame. Alright, so let's go to the 1 hour time frame. There was a sale we are anticipating yesterday on the 1 hour time frame. Let's see if there's something good happening there. So this is another structure that price has been respecting. Okay, we have what? Our sweep here. We have our structural liquidity here. We have this protected high, sorry. Then we have what? First break of structure. And then this is our protected low. So this is the protected low we have. So let's go to the 15-minute time frame. We are going to find a continuation setup. We just missed a setup here, which is this. If you see clearly, we have sweep here, sweep, sweep here, break of structure, structural liquidity, second break of structure. Price tap into this PY and then selling to this opposite direction. So this is a trade we just mixed. So let's see if there's a continuation. So we are anticipating a continuation here, which is on the 15 minutes time frame. So we have this also. This is trying to form. We have our sweep. Okay. We have protected high. We have this. And we have this. So we're anticipating for the second break to continue our so that our confluence will be complete. So once price break this, so if this price does this, then we can know that price is going to do something like this. Come here and then sell. So let's anticipate this. Hopefully it comes. Then we have something to hold on to for today. So let's check out the next pair, which is VTNS. So on this VTNS, let's check what is happening on VTNS. So on the 24-hour time frame, it has been bullish on the 24-hour time frame. It has been bullish on the weekly time frame, and now it's trying to reject. Okay, it retraced. Now it's trying to reject back. Now let's check the 4-hour time frame if you are going to find something tangible. So on the 4-hour time frame, nothing is happening. Let's check out the 1-hour time frame. On the 1-hour time frame, you can see that we have a continuation form here. Continuation that just formed. So this is clearly on the 1-hour time frame. We have a sweep. Okay, we have a sweep here. We have our protected low, which is here. We have our first break of structure, which is here. Okay, and then we have price moving this direction, and then this is going to be our structural liquidity. Okay, and then this is second break of structure, which is here, and then this zone becomes point of interest. All right, and this now becomes our point of interest. So we anticipate price to move a little bit, give us space, and then come back to this zone, and then start giving us series of 15-minute continuation, 10-minute continuation to the opposite direction. So this is what you're anticipating on V25 1S. So we anticipate this on V25 1S. Sorry, on V10S. So let's check out the next pair, which is V75. So from the 24-hour time frame, V20, oh, this is crazy. So on the 24-hour time frame, V25 has been bearish. The weekly is bearish, monthly is bearish, yearly is bearish. Let's go to the 4-hour time frame. We are going to see any recent structure we can mark. Oops, this is moving mad. There's nothing here currently at the moment. Let's go to the 1-hour time frame and see if you're going to see anything. Nothing here at the moment too. So we are going to be avoiding this pair at the moment. Price action has been crazy. So there's nothing happening on this pair right now. So let's check out the next one, which is step 300. Let's check step 300. So step 300 has been bearish on the weekly time frame. It smashes the 1-hour time frame target, not quite long. Let's check the 4-hour time frame. If you are going to see something we can hold on to. So until this 4-hour time frame, there is nothing. Let's check the 1-hour time frame. If you are going to find something on the 1-hour time frame. So on the 1-hour time frame, okay, on the 1-hour time frame, you can see clearly that we have our rule number one, which is what sweep of liquidity. This is our rule number one, sweep of liquidity. Rule number two, we have our first break of structure. Row number three, we have price retracing 50% to give us what? Structural liquidity. Then we have this has been taken out, but it need to dip inside. Okay, at least it need to dip inside before we can start taking sales now. And then this is our protected high. All of this zone becomes point of interest. We are setting price on this 1 hour to come tap into this zone, continue to move to the opposite direction, start giving us series of continuation on the 15 minutes, 10 minutes, and 5 minutes time frame. So this is going to be the finish point, and this is going to be what is this is going to be the starting point. This is going to be the finish point. Alright, this is going to be the starting, and this is going to be the finish. So let's check out the next pair, which is V50 index, volatility 50 index. So starting from the 24-hour time frame, V50 index is bullish. I keep mistaking bearish for bullish and bullish for bearish. So, with 50 index, volatility 50 index is bearish on the weekly time frame, bearish on the 24-hour time frame, but it gives us a structure on the 24-hour time frame. So this is it. You have this. You have this. Then this is our protected high, which is there. And then this is our what? First break of structure. This is our structural liquidity, which is here. This is our second break of structure. Now the whole of this zone becomes what? Our point of interest. So this is the starting point, and this point here is the what? Finish point. Okay, this is the starting point, and this is the finish point. Now let's go to the 4-hour time frame and check if we are going to see a continuation on the 4-hour time frame. So on the 4-hour time frame, we don't have anything. Let's go to the 1-hour time frame and check for continuation on the 1-hour time frame. So on this 1-hour time frame, we have a point of interest here. We have two continuation now. So this is you can see our first row here, break of structure, sweep of liquidity, break of structure, protected high, structural liquidity, row number 4. Then we have our point of interest. So we anticipate price to come into this point of interest and give us continuation on the lower time frame. But if it doesn't, then we wait for this. So this is the recent price action. So this is the row number 1, row number 2, this is row number 3, this is row number 4. Then we have our POI. So we're anticipating for row number 5 to come and do what it knows how to do best. So it's going to tap here. Alright, once it tap into this zone, it's going to give us a continuation on the 15 minutes time frame. Right? And then we can start jumping on trade. Okay, so this is what it's going to do. Okay, then we can start taking sales continuation until price take out this target, which is here. Alright. So this is what we are going to be anticipating on V50 at the moment. Let's check out the next, which is V100S. Starting from the weekly time frame, it's bearish on the weekly time frame. It's here to smash its target, right? V100 is bearish on the weekly time frame. It's here to smash the target, and then we have. Let's go to the 4-hour time frame and see if you find something tangible. The 4-hour time frame, we have this markup here, but it's no longer valid. Okay, it's no longer valid because its price has been overbought already. So coming here now, we will anticipate another 4-hour structure. So let's check the 1 hour and see. For me, I'm not waiting for that continuation anymore. This is the recent one I'm waiting for. Hopefully, price come to this zone to be very great. Okay, we have our rule number 1 here. See for liquidity. Rule number 2, break of structure. Rule number 3, structural liquidity. Rule number 4, second break of structure. These are protected low, and then these are point of interest. So price is expected to tap into this zone. Move, 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 move. Come here and start giving us is a buy continuation on the lower time frame. So we can start taking a trade until price take out this target. Okay, it's going to give us series of 15 minutes continuation until price take out the target. So this is what we are going to be anticipating on this V100 index. So now let's check the next pair, which is step 400. Let's check out what step 400 is trying to do. So starting from the 24-hour time frame, step 400 is bearish. Okay, it's bearish on the 24-hour time frame, but no direction yet of where it's going to. So let's go to the 4-hour time frame and see if it's going to show us where it's coming from and where it's going to. So currently nothing here too. Let's go to the 1-hour time frame and check. So if we don't see anything on the 1-hour time frame, we won't go below that. So you can see nothing is happening on step 400 at the moment. Nothing is happening on step 400. So let's check the next pair, which is V51S, Volatility 51S index. So let's start from the 24-hour time frame. Starting from the 24-hour time frame, weekly time frame target has been taken out, not quite long. Okay, and then 24-hour time frame, we don't have anything currently because the trend is bullish. Let's check the 4-hour time frame. If you are going to see anything tangible on the 4-hour time frame, there's something we can anticipate in the 4-hour time frame. The 4-hour time frame structure too is not really clear. So let's check if this is up to 50%, then we have something that we can hold on to. Okay, this is something great. So we have rule number 1 here. We have our sweep of liquidity. We have rule number 2. We have a first break of structure. We have rule number 3. We have structural liquidity. Rule number 4, second break of structure. Okay, this is our protected low. Right now, what are we anticipating? We're anticipating price to tap into this point of interest and continue the buy to the opposite direction. So this is it. So once it's coming to this point of interest and start moving to the opposite direction, we start taking series of sales until price take out these targets. So this is the starting point and this is the finish point. Okay, this is the starting point and here is the finish point. So this is what we have on V51 is we'll be anticipating this and then hopefully it gives us what we want. Okay, so we've anticipated 14 pairs for today and we haven't gotten a setup. We're only anticipating. So we are anticipating a setup to complete to form on this V75 1S. It hasn't done that yet. Okay. So we're anticipating a sell here. Maybe it will happen, maybe it will not happen. So let's just check the next pair, which is I think we are done for today. Okay, we've analyzed most of the pair and then we've checked out most of the pair and then we haven't gotten any setup, but we'll sit on our hands and then anticipate more sets to show up. Okay, remember we are looking for quality, not quantity, and less is always more. Okay, less is always more when it comes to this trading stuff, because if you take unnecessary trade, you lose a lot of money. And when the real time frame shows up, the real setup shows up, you might not have capital anymore. So it's all about being patient, knowing what to do, doing the right thing, and then you make your money. So if you watch this video to the end, don't forget to like, don't forget to subscribe if you got value from this live session. And tomorrow I'll see you 6 a.m. to 7 a.m. And the broker I use to register for you to trade volatility in this is Deriv broker. The link to registration is in the description of this video. So register, fund your account using my link, and then let's trade together. And don't forget to join the Telegram channel. I'll see you tomorrow, 6 a.m. to 7 a.m. Do have a nice day and make sure to apply risk management in your trading and in life in general. So I'll see you tomorrow. Take care.